Start off the show today. A lot of people this time of year start making plans for next year. They're planning their purchase, they're planning their sale, but probably more important than that, they're planning all of the junk they're going to buy during the holidays that's going to jack up their credit score. So, Mike, we get a lot of people that come in and maybe they're a little short on their credit. Their numbers aren't quite good enough. And, so we wanted to talk today about how long and what steps can someone take to improve their credit. So, we have some people out there, even home sellers, that are waiting to sell their home because they can't qualify to buy, or because they're afraid, they're afraid of the process. So we want to kind of, dispel some credit myths that people might have, give them some tips and help them get on the right track for 2019.
Yeah, I think sometimes is the thoughts that it takes a long time to fix your credit, which isn't always true. Sometimes yes, but sometimes there's some tweaks that can be made and it happens really quick. I actually have a recent example that we just closed on. It was a 30-day closing when I first talked with the buyer. Credit score was under 600. Noticed that there were a few credit cards that she had that were maxed out. Sometimes paying down the balance on those, or actually not sometimes, a lot of times when you pay down the balances of new credit cards, if you can get them at least under half the limit, you can see a pretty good score increase. So, she had the means to do it. She paid down 3 different cards, I think it was. We did a credit rescore, and within 6 days had her over a 620 credit score. To, it made the loan process a lot easier, but also open up different loan options, better interest rates, things like that. So sometimes it can happen in as little as a week.
And a lot of times, so sometimes, obviously we know that the number of accounts, debt-to-income ratio, the amount of debt that you have can impact credit. Sometimes there's errors on there where people will decide today, hey, I want to buy a house now, and they probably should have started the process earlier, a few months before, because now they find that there's an error on their credit report. There's an account that's reporting as delinquent that was closed years ago, or there's some sort of issue, and to go through the process of correcting that can sometimes take some time, but ultimately it's the path towards the best score possible. It's another reason why people should start that process early, but getting those errors corrected with the 3 credit bureaus is something that can have a dramatic impact on your score as well.
Absolutely, and you see that a lot with collection accounts, for instance. You see that more than anything else, I would say, where maybe that account's paid off, but it's not reflected, or something went into collections that shouldn't have, it was paid. You see it a lot with medical collections, for instance, and those can have a big impact on your score. One that I probably see more than anything else that people may not realize is when they're added to someone's account as an authorized user. A lot of times that's a way to help you build your scores if you don't have any, but on the flip side, I've seen many, many instances where they were either an authorized user or co-signed for someone else, and that person's not making the payments, and it ends up affecting their credit. Right.
Yeah.
Sometimes with the authorized user, that's an easy fix. You can just have that person remove you from that account, then it drops off of your credit report, so you kind of lose that negative history. So it's definitely a good idea to have someone, check your credit, see where you're at. There's even, free credit monitoring out there. I like to let everyone know that, in the mortgage world, we use FICO scores, which is a different scoring model than most of the free companies out there. So if you see your score one place, odds are that's not going to be the same.
The exact same score, yeah, because all the bureaus are a little bit different. The credit correction, correcting errors can sometimes be quick, and sometimes it can take a few months. It just depends on how elaborate the correction is and whether or not that creditor disputes your version and all of that. But so it's an important reason why, if you're thinking about buying next year, you need to kind of get it under wraps now. Another important thing about credit this year, and we talked about this, not overspending during the holidays, not extending yourself with credit during the holidays, because that's going to hurt your credit score as well.
Exactly, yeah. One of the bigger things and that moves scores faster than anything is your revolving debt, your credit card. So if you're carrying a low balance on a credit card and you go out and buy all your Christmas presents, for instance, on it, you max out that account, your scores are going to drop. It happens. Personally, I can remember a few years back I had several cards that, you know, all of them were probably under 25% credit limit, and I did a balance transfer on a 0% offer, so it went from a bunch of accounts basically spread out to one being maxed out, and my scores dropped 80 points in 1 month. You know?
Yeah, see, it's interesting because so we have two credit cards that we use for business purposes, and we pay them in full every month. I'm not a big debt person, so we pay the cards in full every single month. And if I check my credit, like after those accounts have been paid, and they're at 0 for that month, my score's great.
Right.
But if I check them when those are nearing the top, now we pay them in full every single month,
right.
But literally my score can be impacted at 50 points just by the time of the month when I actually check my credit.
Exactly, and that's what a lot of people don't realize too. Credit card companies, just creditors in general, they don't report to the bureaus when you make payments. They report at certain times during the month. So in your instance, paying it off every month, it depends on when your credit's
Correct.
checked. You know, it may or may not be reflected yet.
Because it depends on when the credit company
exactly.
reported. Another important thing is dealing with delinquency, dealing with delinquent accounts. And there's a strategy involved here because I've seen people that have delinquent accounts or accounts in collection make mistakes and end up hurting themselves even worse.
Right.
So this is the important part of you'd think, oh, well, just pay it off. Just pay it off may not be the right solution every time.
That's what I was getting ready to say. A lot of people are under the impression or assumption that if you pay off a collection account that it's automatically going to make your scores better, when in reality sometimes it makes your scores worse. So those collection accounts eventually will become dormant if they haven't had any activity for 2-3 years, for instance. They're no longer even reporting to the credit bureaus. It's just there. And when you pay it off, it triggers some activity and kind of brings that negative account back to the forefront again.
Correct.
So, all loans don't require that you pay off collection accounts. So another reason to speak with a lender to see if that's something that's going to be or need to be addressed or not, because you may not have to pay off a bad debt. Now, you might want to get it off your report at some point, and I've advised clients before, close on your house first. We don't require it to be paid off, for instance, and then take care of it afterwards.
Another important thing that a lot of people, don't comprehend is, you mentioned that ratio, that credit utilization ratio.
Yes.
So, for example, if you've got a credit card that's got a $10,000 limit, and you're using all 10,000 of that, you may be able to call that credit card company and say, hey, will you increase my limit to 15,000?
Right.
Then when you're putting 10 grand on it, it doesn't look like you're maxing it out every time. So getting those limits increased, can help. I've seen the horror story though, of someone going out and getting 7 of them increased at once, and all the hits that takes on your credit. So you got to be cautious about that too. But getting that credit limit increase can help you.
Yeah, the utilization is a big pull on the credit score. So not only individual accounts as well, but the current FICO model, for instance, that the mortgage industry uses. Not only does it use an individual account, it looks at your overall credit too. So if you have 5 accounts that are paid off, 1 maxed out, you're probably still going to have a pretty good score. Maybe you spread those out between the 5 if it makes sense and get your scores even better. But even more importantly there is, if you pay a credit card account off, for instance, don't close it. Leave it open, because it still helps with the total overall utilization.
Oh, that killed me. After college, I went out and I had, got all these credit cards, and after college when I got a real job, I thought...
That's right when they do it, though. They get you in college and right after college. They come soliciting
and then I thought I was
crazy.
doing a great thing because I got a real job, and I went out and I paid off all my credit cards, and I thought, you know what, I'm not going to do this again. I'm going to close them all. And my scores got absolutely hammered, and then at that point there was no way for me to get them up because I had closed all my accounts, and then no one wanted to give me a credit card because I had such a low score.
Right.
So it was a couple of years where I just had bad credit, and I had to wait until I could open some small $500 credit card so I could start building it back up. And I had no cards.
The solution that I learned kind of in the same fashion was, pay it off and then just cut the card up. You don't need to close the account. Just eliminate your ability to use it anymore. Then you ain't going to get a bill anymore, but you at least still keep it open and out there on your credit report. It's funny, you know, we have a lot of different accounts across several different businesses, obviously, and so, you know, for us, it's a little bit challenging and complicated with that many cards. I mean, I literally have a rubber band. I mean, I have a bunch of credit card accounts, but it's like, you know, sometimes we have credit card accounts for the homes that we rent, and then the homes that we flip, and then the team, and then the brokerage, and then the title company, and so, you know, we have all the, you know, because it helps us better categorize the expense by having a card for that specific thing instead of having to go through each, you know, go through one credit card and pull out a bunch of stuff. The reality is, though, that, you know, for us, we use them and then we pay them off in full every month, but it can get confusing for people. You know, they can make a mistake and then they're using the card that they didn't want to use, and so I believe, you know, if you don't want to lose the credit history, just cut the card up and then you don't have to worry about it.
It's kind of a flaw in the system, really. You know, like your example, Robert, you think you're doing something good, and you did.
Right.
You know, you got debt free, but there's no knowledge out there really to know that you shouldn't cut it up. So to me, it's a flaw in the system.
I had no idea.
I'll tell you, I think, you know, look, with artificial intelligence and bots and all the crazy stuff coming, it's not going to be long for we're not going to have any cards at all. Everything's going to be on your phone. You're going to have an app. You're going to have like 7 different QR codes. You're going to have a little chip in your, you know, thumb or something.
There's a lot of it now.
Fingerprint stuff.
Apple Pay.
I mean, it's coming.
There's
like
a lot of stuff.
We're not going to have cards anymore. It's all going to be electronic, and there is becoming to be more transparency though with, you know, Credit Karma and all the different apps where you can kind of monitor your stuff and get advice. There is more advice out there than there used to be. Like Robert, there's more advice than there used to be back when you were in college.
Totally.
Now there's a lot more stuff out there telling people, hey, what you should do, what you shouldn't do. And I mean, my daughter's 15, and you know, a few years she'll be going off to college. She's already getting credit card solicitations. I'm like, this chick ain't even got a job. But what I did was unbeknownst to her, hopefully she's not listening today, she's authorized user on a couple of our accounts on purpose, just because we thought, you know what, it'll be a good idea it'll build it for her so that when she does actually get her own stuff, you know, I just hope she doesn't, you know, go call up Chase tomorrow and pull off